All right. Good morning, everybody. Welcome to a market open here. I think that we're sitting in pretty good shape. We got bank earnings coming up as we enter into the earnings season for the first half 2021, and we look forward to the guidance that we have in 2022. So that'll be important for us going forward. I got WEBULL up and running. I'll share that out with you in just a second here. There we go. All right, there we go. We got WeBull up and running. Bring this back up so I can see the comments as you guys toss those things in there. All right, I'll be streaming today. I'll say this several times throughout, so that way just so everybody is aware of it. I'm streaming until 10 a.m. today. I need to make sure that I cut it off on time. I always anticipate for 10 o'clock, but I want to make sure that I cut it off on time today because I have a dentist appointment, and then tomorrow is going to be the same thing. Not a dentist appointment. I actually have a haircut, and then so I'll be cutting off at 10 a.m. And then on Wednesday, I leave for a family vacation. So I won't be live streaming, but I still anticipate putting a few videos up during the family vacation. I'm an early riser, and everybody else will be sleeping in because it is vacation. So it should work out. All right, that's enough of the personal stuff. Let's move on from there. On to, well, I got Goldman Sachs up here in front of us. And their earnings, I believe, are reported tomorrow. And banks should have done relatively well during the first half of 2021. So I think that we're going to have some really good results coming out of the banks. And I think the price action that we see, let me go intraday on the chart here. The price action that we see as a result of those earnings will really go with any commentary that they give on the outlook for the rest of 2021. So that guidance that they provide us. If they talk strong about inflation news, inflation can be good for banks, or if we do rate hikes or something like that, that can be good for banks. But really, what they say can also impact the rest of the market. So the things that we want to be aware of and the things that we want to be watchful for as those bank earnings come out. Goldman Sachs is one that I have in my dividend portfolio that's available over at my Patreon. Should you go over there and check out the stocks that I have and the portfolios that I have my growth portfolio, my dividend portfolio available over there. And they're two relatively small portfolios, depending on how you want to view it. The dividend portfolio I started on February 1st is when I made the purchases for that one, and that's done quite well. Since then, the growth portfolio was sort of a collection that I had running up to kind of starting this whole YouTube thing and Patreon and Discord. And so that one didn't have a set start date like the dividend portfolio did. It's just growth stocks that I had that I made available. And at some time in the future, I might start another portfolio for growth stocks, especially after we had the sell-off and the resettling. And, maybe during the summers, want to do that as we get into this second half here and we receive that guidance. And I really would like to look for a little bit more stability in the market before making another larger financial purchase. So looking at Goldman Sachs here, big old price wall in the pre-market hours here, $370.35. Let's take a look at some of the other things that we have. All right, it looks like I need to rearrange this just a little bit. All right, Webull, when it gets updated, it seems like it resets my columns that I have here. I want to see the percent change that it gives, and sometimes it's reluctant to give me those percent changes that I'm trying to see. All right, so let's see what we got here. Novin's been showing up recently. Snowflake in the pre-market. Wow. All right, so this looks like it's riding up from yesterday and sort of trading sideways across those hours. We'll see what takes place as that goes along. This is a data play, another tech play that you would have. There we go. There's the profiles. So they do a lot with cloud services would be the way to talk about Snowflake. And if you guys, those of you watching, if you want to put in any comments, any stocks that you want to see, just let me know and I'll talk about those. Otherwise, I'll just go through some of the ones that I want to take a look at and kind of talk from there about the different stocks that we like to see. I would do want to mention Shift Technologies. That one's been doing phenomenally since its most recent sell-off that it's had. Alcoa is another one I think I want to mention. All right, so let me see what else we got here. Mind Medicine, Macy's. Let's check in on retail, see how we're doing there. All right. So Macy's actually want to go back out to the daily chart. We have about 8 minutes until the market opens. There we are. Macy's is one that I owned right around, I think, like $9 a share. That one's done quite well. As a matter of fact, right now it's up over 2x. Unfortunately, I sold it off in exchange for some other things that I thought were going to be moving a little bit better. And I was right for some of those. And I also felt like I was too heavy into retail, anticipating a little bit sooner of a recovery. And so I sold that one when I was about, I don't know, 15% up or so. So you can't be mad about making money. And I'm certainly not going to use hindsight. But this climb that we had in retail is a good one. We sort of, with a little bit of volatility, a little bit up and down, have been trading sideways since about the middle of May on retail, sort of hesitating and taking a breath as we get into reopening. And now that I'm finally getting out into the public, and I recently went on my honeymoon to Jamaica, you can see, and I don't know how much you guys have been out, but you can see how much things have changed, sort of degraded in a way since the pandemic, that when you go to different businesses and stuff, there's a lot of them that seem very shorthanded. The airlines are certainly no exception to that. And that employment just hasn't rebounded the way that we would like to see it come back. And then also talking about the experience while you're out, the experience hasn't been phenomenal. Even if we think about just even the recent shipping industries with the higher demand that we've had, and trying to quickly train people in order to meet that demand, it's been hit or miss, and the employees that you get aren't necessarily the best trained employees. Sometimes, I mean, sometimes you get the people who hang on, and some people do a phenomenal job. But I recently went to a restaurant because we had a gift card to go, and it's been a while since we had been out, so we went to this restaurant, and their wait staff was significantly slimmed down. There was really no crowd, and it was during prime dinner hours. And it's typically a fairly nice restaurant too, and typically fairly clean. And it was not clean. It was not in good shape. They had a help wanted sign outside, which is something that you wouldn't really see at that restaurant. And I think it's very reflective of some of the businesses that we have, and some of that recovery that puts us a little bit further off than what we would normally want. As a former waiter, as a former server in restaurants, I went wherever the money was. So during the pandemic here, when there was nobody going to restaurants, or there were even restaurants closing, or restaurants being at 25% capacity, that sort of money that came from being a server and either doing high volume or high quality, or maybe a mix of both, it wouldn't really pay the bills. For me, I got $283 an hour for being a waiter, and everything else was off of tips. And from the tips from the people who would come into the restaurants, I did pretty well. Usually, in my area, anywhere from like $20 to $30 per hour for working at a restaurant. That was decent. There's people who make a living off of that money. There's people who make a living off less. But on days when you didn't have those crowds, like I live in Pennsylvania, so we had a particularly snowy day, and I could walk home with maybe $5 in my pocket or something. So if that was the story every day, day in, day out, I just would have had to leave and find something else, because I just couldn't provide for myself or even really for others on that low wage. So just some things to consider when we look at that. Snapchat's done extremely well. This one was in my growth portfolio at one point in time. I think I had it, let me look at the prices here. I think I had it in the mid 40s, maybe up to about $50 per share. And when I saw it go up into the 70s, I actually entirely sold my position, because I felt like that was a little bit rich for Snapchat at the time. And so far, that turned out to be the case, although it's done pretty well since those times. We had a couple of jags down, and then here it got back up to 70 and hit a pretty hard resist. And so right now, in the previous days, it looks like in most recent ones, this 50-period moving average that I have up here, the 50-day, is actually looking to hold pretty well so far. So it looks like we have a lot of stocks that have a decent start going into this, at least a lot of the tech plays, the ones that are a little bit more exciting to watch. So watching those play out, can be a lot of fun, versus the ones that don't really move too much, who only give you, maybe 0.5% or 1% a day. There we go. Let's go to the analyst estimates here. So actually, the average analyst estimate on this one is 77 up to $100 for the high. 39 analysts covering this. Holy cow. And just over half of them, so 20 of them, say that it's a buy, and then almost a quarter of those 40, so probably 9 people, 9 analysts call it a strong buy, and then it looks like we have maybe 9 more out of that. Yeah, let's say to hold it, and then we have this sell. All right. What else do we have moving here? Let's go to the markets and see where our volume movers are this morning. There we go. TBLT, tough build, down in the pre-market by a lot. Here we go. Virgin Galactic, that's a fun one. That new era space race, if you want to call it that we have for Virgin Galactic. There we go. With Richard Branson actually making it to space for a few minutes, I believe. We should have some news on that. There you go. There you go. An hour ago, Virgin Galactic stock climbs after a key test flight with Richard Branson. 5 things to know. As we watch this play out, now that that flight has happened, and we know that it was a success, I wonder if we'll see Virgin Galactic cooling off a little bit. That'll come down off these highs, not that excitement took place. And that was something I mentioned before, the whole buy the rumor, sell the news. So the hype and the anticipation of that test flight, I think, did a lot to drive these prices that we saw happening. Well, now that test flight took place, and now it's time to digest that information. And I think some of that hype might die off over time here. Can you please explain what the heck is going on with SGOC? I'll take a look and see what I see, Tavin. And hello, and good morning to you, Angelito. Got about a minute here until the market opens. Let me look at that ticker again, SGOC. Woo! All right. Wow. Huge volume spike. That was last trading day. That was on the 9th. So I'm wondering if some of that is from the after hours of Friday carrying into the pre-market here. Well, no, because right here is when this is the first half hour of the pre-market ended today. Lots of volume already going into that. We went from $2 and then we spiked up over 18. So going 9x on that one. Wow. There you go. Surging almost 5x on heavy trading volume. There we go. What kind of play is it here? Got about 10 seconds to market open. Technology, tech equipment, electronic equipment parts. Okay. I mean, some of this volume, I don't know too much about this one. I mean, if it's a high short interest and low float play, it could be one of those things. If it's a company news, I'm not really sure yet. What I can say is when it's up this high, and we'll see if it comes up and tags resistance right at 1880. As a matter of fact, where's that price wall? Decent selling pressure, but man, it's moving quick. It's going to be hard to tell on this one. So Tavin, I would have to take a look at this one. Sure thing, Quarantine. Tavin, I would have to take a look into this one and see what it has to say. Let me go down to the 1 minute just because we're right at market open here. So if we have company-specific news that would be a driver for this, then that would be absolutely excellent at explaining what's taking place. If we don't, there we broke resistance 1880. We hit a new high. Holy cow. Sometimes Benzinga will give us a little bit of insight into what's taking place. We could also look at Seeking Alpha. Love Seeking Alpha, and also Tip Ranks is another one. Benzinga's great. Let me see. During Monday, the market value of the outstanding shares is 1.3 billion. Okay, well, that doesn't tell us much other than the fact that they're up, but we already know that. There you go. Still a decent amount of buying pressure there, but we've definitely slowed down. I wonder if we got a breaker halt on that one, because right now the price action isn't it's not moving. So we'll have to see what's taking place with that one. Wow. Yeah, it is absolutely nuts. I mean, if it was a like I said, if it was a signs of a short squeeze or a gamma squeeze, sometimes when you get volume spikes um, on low market cap stocks, you can actually have price manipulation because people or institutions that would have millions or billions at their disposal can come in and they can really put in a lot of volume and get people to think, oh man, what's going on? I better get into this. Get people FOMO buying, and that could also be an explanation of what we're seeing. Like I said, I don't know if there's company specific news, but when that kind of stuff happens on a low market cap stock, they're very susceptible to market manipulation versus when you talk about like Apple that has over a $2 trillion market cap. There's going to be very little ability to move that price in big ways up or down because it would just take an incredible amount of capital in order to really move it in the first place. All right, let's see what else we got. NEO. There we go. So NEO actually has some decent price targets and some relatively new price targets, like within a matter of days. Even I think that there might be like 3 new analyst estimates out on it, and they're reporting like a 40% upside on NEO when you take a look at it. Let me go to the 30-minute chart to get rid of some of this noise. There we are. So there we can see a little bit more what's going on with NEO. So recently up at 55. And so what we get, if we look at the daily chart on NEO, and this goes a lot with EV, tech, high growth, all that, we get a significant bounce after way too much of a sell-off. There we go. This will make for better viewing. Maybe. There we go. All right. I apologize for all the zooming and stuff. My computer's lagging. My next tech purchase, which will probably be a ways off. My next big one, I should say, is the machine itself. So that way it handles this a little bit more. There we go. There we can see the run up that NEO had. If you were following this for a while, I day traded this back at like $5 per share. So to think about the number of shares that I purchased as a day trade, where I'm risking a lot. Well, I put a lot of money out there, but risking a lot less because of the stops that I put in, but I'm also making less because the price targets that I put in there. It gives me some lunch money. It's not wealth building the way that long-term investing is, which is mostly why I do long-term investing. In any case, moving on to this. So after this huge sell-off from like over $60 a share down to 30, we took a pretty good bounce, brought us back up to 55. I would say that we're in really good shape. And I think this is a nice correction to take place, that it sort of calms us down and tempers our expectations a little bit over time. I think that this was a little bit too much too soon. And when you look at the analyst estimates on this, the average right now to 22 is 55. And we're going to keep on getting smacked around with anything Chinese stock related because of Chinese government and trade tensions with China, between the United States and China. And we can just expect this sort of volatility. You're going to hear FUD news a lot about banning Chinese stocks from the stock market. That seems to circulate every so often, every time that there's a tense moment or something like that. And it's like, oh, could this be the time that Chinese stocks are delisted from the New York Stock Exchange? And then, it goes on from there. So I wouldn't worry a lot about that sort of noise that you hear. And not a financial advisor. And, these are my opinions. So just take what you make of it there. Some of the bigger names that we have. So Citigroup and Morgan Stanley. We have Bank of America in here. All coming in with buy ratings. Jefferies was the last hold rating that they had, and that was 4 months ago, calling it a $39 stock. And I just think it has way too much momentum in order for that to happen. So when we look at some of these other prices that we gotten recently, and I like to just get a feel for them, we're ranging from 57 up to $72 per share. And right now we're currently trading at like 45. So we have like a 25% upside. And when you look at the average estimate on the 9 ratings that they're currently reporting on right now, we're close to that 40%. Before the market opened today, from Friday's close, it was 41% upside. We're up a little bit from there, so now it's 38% upside. And they do a pretty good job at keeping up with those prices. I just today pulled the trigger on tip ranks for the premium version because I think that it's just that important to see these updated price targets, especially given the market conditions that we've had. And I don't yet have an affiliate account with them or a referral link, but it's something that I'll see what I can do in order to get one out there in case you guys are interested and you'd like to support the channel through something that you were going to do anyway. So if you're going to sign up for Tip Ranks, if I get that referral link out there, I'll let you guys know and I'll put it down in my comments. So that just came from today. So let me catch up with what we got going on here. 876J, please look at open. Yeah, Open Door Technologies. I mean, real estate itself is going to be messing around with Open Door, and you have a really divided crowd on Open Door Technologies. There you go. So where were they up? Almost $40 per share. So this is one that I think I'm gonna have to look at my cost basis on this one. I have it in two different portfolios. One of them I'm definitely green. The other one I might be in the red. That I'm at in the low 20s or something like that. And right now it's currently trading at 1641. And the trouble that they're having is with their inventory and really getting their inventory for homes for sale, getting that inventory up. They ran short into December. They had some really weak results coming out of last year and the pandemic really affecting their inventories. So just in case you're unfamiliar, Open Door really streamlines the whole buy and sell process. They'll purchase a home from somebody who's trying to sell it, and I think they turn it around, like the sale happens in like a week or something like that. It's pretty crazy. And then they go through and they do some cosmetic renovations, I'm sure. I don't know if they do major structural ones or not. But then, so they'll flip the house and then they'll put it back on the market, and then they take profit off of that. And then I believe that they also are into financing and stuff. And they're a smaller version of, you can think of it like Zillow. Zillow calls themselves the top of the funnel, that they get people into the home buying process. And Zillow's trying to work their way down, that they carry their customers from finding the homes all the way through like the closing on the home and moving people into their homes. And I'm sure financing would also come along with that, because I believe the margin would be very good with that. Open Door Technology is sort of doing the same thing, but in I think a little bit more in-depth way, but with less exposure than Zillow. So they're actually more towards the bottom of the funnel, in my opinion, that they don't have the same way of getting people into to find the homes like Zillow does. Maybe they do, but on a smaller scale. So that's some of the struggles that they've had. With that said, I mean, I'm in my home right now and here in my office, and I can tell you I absolutely abhor the home buying process. And if I need to refinance my home, I did 2 different cash out refinances to put more money into my home. And when I did that, it took weeks, if not months, in order to get my original mortgage and to do my refinancing. And so if they're going to come through, because I will sell this home within the next few years, we're working on finding property to acquire where we can build our own home that we've had our eyes on for a while now. And if they can come into the market that's around here, that's the other thing, is expanding markets throughout the United States. That they've done a lot to really grow into other markets, and they really have been filling out their inventory. So we'll have to watch their guidance to see how their growth is progressing, how the recovery is progressing. But if they can tell me that they'll buy my home from me, that it takes me 6 days or 7 days to go from putting my home on the market to sold through Open Door, absolutely, I would take them up on that. And what they say is that they're going and this is where more of the debate comes in on Open Door Technologies. The seller is actually sacrificing a little bit of cash in order to sell it to Open Door Technologies. And they're like, hey, for the convenience, people are going to take us up on this. Well, when you watch homes that sit on the market for like a year at a time, like you're paying that mortgage. If there is a mortgage on the home, the homeowner is paying it throughout that entire year, waiting for something to sell. And not saying that it always takes years, but it can take years. And if that's the case, and it keeps on changing those prices, Open Door, I mean, their offer could actually be more attractive. So there's things to look at through there. Analyst estimates have been tempered a bit since then. We'll actually take a look at Tip Ranks too to see how recent these are. So 7 analysts covering we're right around that low analyst estimate, and I like to be below it. So this is actually good in my opinion here. So I'm bullish on Opendoor. It is a little bit of a riskier play. I would definitely count this as higher risk than some of the other companies that are out there. Zillow would be the leader in the space, in my opinion. So we could also look at Zillow and see how their price action matches up with Opens and see if they're both telling a similar story. So we'll come back to that in just a moment. I didn't spell it right. Let's try again. All right, so right now the wrong thing's going to load. Let me bring up Zillow here while we're waiting that to take place. There we go. So for Zillow we're at 116. So it looks like we have room $14 to get up to there. So like 10 to 15% upside to the low analyst estimate. 18 analysts covering this one. Where's our on level 2? About 116. We're hitting a price. Well, that's actually, I was wrong. No, it wasn't 116. By the time we get over there, 122. Okay. And then up to 235 for that high analyst estimate. Woo! All right, we'll have to see what kind of story we get there. All right. So now let me type this in correctly. There we go. That's the one we want. So $28 per share, 74.78% upside, so almost 75% upside, up from $16, what they're saying is the last price. And we have a low estimate of 17, even on tip ranks. So here we go. Goldman Sachs, $17 2 months ago. Key Bank, $42 2 months ago. 34, 40, 31, 25. Looks like we got a hold, but no prices at all from them. So Oppenheimer, 25, and that was from last month. All right. So like I said, people were divided. Our analysts are divided on this one. You can see in tip ranks, they really are somewhat divided. We have buy and hold. We don't have any sell ratings right now over the 4 analysts. This is a smaller company, so you're taking on a bigger risk by investing with them. So just be careful, but it does still have an upside from where it's at right now. And we want to watch the guidance that comes out for Opendoor Technologies. All right. Good morning, Pat. Isabeth says about SoFi. Okay. No problem, Jay. There we go. All right. So SoFi, what do we got? We got 2 analyst estimates right now. They're currently rocking just under $17 per share, it looks like. And then low analyst estimate, we'll go off that one, $25. Since there's only 2 of them, average $27.50, so another 10% up from there. And let me see, $8, about 40-ish% upside to the low analyst estimate. So let's go to the chart and see what it has to say. Perfect. All right, so SoFi right now has their growth already happened, and that's one of the arguments that we have that would be sort of a bearish case. That's like, hey, they grew as much as they're going to grow. They're not going to go from here. And the more bullish case is that their growth is just beginning in fintech. So if you believe that their growth is still ahead of them, then this is a very bullish play to take SoFi, and you're getting a very reasonable price. So if I zoom out just a little bit more, that you can see where we get that sort of support coming in, like down to as far as $14, which would be about a 20% loss versus about 40% to the upside when you look at the analyst estimates. You know, that's 2-to-1 risk to reward. You know, it might not be a bad play. It's one that I would definitely, as a matter of fact, when I say I would definitely, I personally am undereducated on SoFi, but it's one that I feel like now's the time that I need to make sure I'm well read on this because it is one that really piques my interest and intrigues me. And I know that there's a lot of bulls that are out there that really want to see a lot of success come through for SoFi. And this most recent sell-off that we have coming down to this downside, that's something that you see through a lot of tech and in the high growth plays is sort of settling from that most recent run up that it's had. You could say for SoFi that it sort of oversettled or overcorrected. So maybe after the sell off, now is when we start to see that sort of bounce. Let's zoom in a little bit. All right. And let me see RSI, since I have that up down here. Currently in bearish territory off of that overbought period that we had up there. If we see this dip down below, I mean, honestly, if I were going to take a position in this after I read up more about it and make my decision on the long-term outlook for SoFi, and if I do take a position, it'll more than likely be a long-term position, so years long. Although I do sometimes take larger chunks for swing trades to take advantage of price activity. But if this RSI does drop below when I'm ready to buy, if it drops down below 30 where we get hit oversold, that's a time that I would absolutely love to jump in on SoFi. So we can pull this up on TipRanks too. We can see what's going on there. Not a bad start to the day. It looks like we're starting to come back. Let me look at. I just want to jump back to the moving indicators right now that we have. All right, we don't have a 200-day on this, but we have the 50. We're trading below it, and we're also down here below 50 on the relative strength index when we look at this one. So sort of kind of in a bearish point, but honestly, I wouldn't. I find it hard to believe that we're not overcorrected to this point in time. I think that we'll see that price turn back around, but I think it's also going to go with a lot of the overall markets at this point while we're watching it take place. I wanted to bring up TipRanks on this one. There we go. Yeah, so if I were going to take a position, like let's say that I did my research, I like the look of it, that I absolutely believe what TipRanks is saying here about the 2750 upside on this one. Those are things that that would make me think that this price, while it is sold off quite a bit from where it was at just a few weeks ago, this would be a time that I would feel much more comfortable jumping in, especially because we're below the low analyst estimate of $25. We are significantly below that low analyst estimate. So if I really believe what the analysts are saying here, that this would be a place where I jump in. Unfortunately, we only have 2 analysts covering it right now because it did recently go from, I think it was IPOE before it was SoFi. So until we have a little bit more time and age on this, we won't really have more analyst estimates covering it. But yeah, really, that's a really interesting stock. It's one that that's really got my interest. I think it actually deserves my attention sooner than later, especially given its most recent price action. All right. Thank you, Isabeth. I appreciate that. No problem, Quarantine. Plug position play. All right. All right. So quick story about Plug while we're looking at it. For Plug, I was just a little bit late to the news about the deal with, was it a $10 billion deal, I think, with South Korea to work on their hydrogen energy infrastructure. So for that one, I did not catch it down in the 30s. I actually caught it right around $44 per share. So it was actually on this day. If I go back and look at my purchase history, I'm almost dead certain that January the 7th was the day that I actually made that purchase. Got a few shares at 44, tossed in my growth portfolio, and then I expected the hype to take it a little bit further yet, and it was really. I debated just leaving it there for the renewables play, and then I watched it go up over $70 per share, and I was like, this is way too rich. Like this is all hype. Like not all hype, but a lot of it's hype. So I should sell where I'm at, and then after things settle and it corrects, and from that high up, it's probably going to overcorrect. I was like, I should just cut it here, and I didn't. I don't know why I didn't. I couldn't tell you. I didn't write it down. I didn't stick to my plan. And so I went from having a position at 44 that took me up to 75. So I went up like into the 70s. I went up with like a 60 to 70% gain, somewhere around in there, because I wouldn't have caught it at the top. But I did watch it go over 70, and that's when I was really strongly thinking about selling. And then I didn't. For whatever reason, I didn't stick to my plan. When I watch something take a few days to go up tens of percents, and then not cut it for the overcorrecting purposes, especially when it goes up as quickly as that one did, because it's going to come back down. It's going to give other opportunities, and I just didn't bother. And so now I have that same $44 cost basis, and the stock's at $28 per share. So that's what I get. That's a nice little lesson to me for not taking advantage of those moments when I mean to. So sometimes the moment's just right. And when you know that moment's just right, well, then go for it. If that's your plan, we'll just call it life advice, not financial advice. I think it was Theodore Roosevelt who said, in times of decision, the best thing you can do is the right thing. The next best thing you can do is the wrong thing. The worst thing you can do is nothing. And that's exactly what I did, was nothing. Yeah. Anyway, Plug Power. So getting back to this, Angelito, thank you. And sorry for going off on a tangent there, everyone. When we look at this one for Plug Power, hydrogen, I think, is the next phase that we have for clean energy. And being the next phase, I think right now we're still in that early time where the infrastructure is not there, while it's still fairly expensive and actually fairly dirty to produce that hydrogen. But you could say the same thing for like the lithium ion batteries, that the environmental impacts that just producing the lithium and producing the batteries, even though it might be overall a green move and it might overall lower carbon emissions, it still doesn't negate the fact that it still uses plenty of fossil fuels in order to make the hydrogen, in this case, in the first place. So what I think we're seeing with Plug, I don't think that we're seeing something that's it's not a mature market. It's one that's a very early stage market that has a lot of potential and it has a lot of promise. But if we talk about the S curve that we hear a lot of, if you watch anything from Kathy Wood, I think that we were at the beginning of that S curve. And let's see, I don't know if I can draw it correctly for you guys in the air. If I'm reversed, let me actually go to StreamYard. Oh, there we go, my streaming application. And then I can see there's my hand. And I wanted to go from left to right. So I guess from over here, that's the way that we want the S curve to go. We're still in the lower part of that S that we haven't really, in my opinion, hit that part for hydrogen where it really takes off price-wise. Plug, I think, has a really nice position in that, but I still think it's a bit early for them, and it's going to take a lot of innovation and a lot of or a lot of proven growth in the company itself, or a lot of demand for their products and services. Those are the things that are going to really move Plug Power. As for right now, we're seeing it right around like $28, that it's catching a bit of resistance. We already have gone through the death cross. We still are on the 200 period moving average that we look at here. We're still positive, so we're still bullish. We want to see this 50 period start curving up towards it if we're going to see this continued growth. It is nice that we saw a higher high than what we saw previously. The lows are about even. But again, some of this that we see here goes along with the rest of the stocks that they've sold off recently. So I don't know that this most recent sell-off is, wholly contributable to what's going on with Plug. As a matter of fact, this whole run that we've seen isn't really entirely contributed to Plug alone, that it goes along with the growth in clean energy and renewable plays that we would have. All right, let me get back to YouTube here so I can see the comments that you guys toss up there. All right, Plug. Time to respond. All right, Isabeth. No problem, Isabeth. Have a great day. Good morning, Polly. Angelito wants to know about Twitter. All right, so Twitter. Twitter amazes me with the way that they were able to survive in the social media space. For a while there, it really seemed like they would be down and out, and that they were sort of like just an old technology that nobody really cared about. And I really think for finding focus groups and really passionate groups of people to kind of gravitate around a common purpose or a common theme or common topic, I really think that it found its niche, and I think that they're doing a lot to innovate over time with that. There we go. I believe that they just added on a premium service for Twitter, and I don't remember the details of what that adds into it. I think from what I looked at the analyst estimates before, that we might be on the rich side of this, maybe not. Yeah, there you go. So we're up around 70 right now, and in my opinion, running a little bit rich. When you look at the analyst estimates, 40 of them, over half say to hold it, and then we have a quarter of them that say buy or strong buy. So between those two, and then we have 10% coming in. So 4 of them coming in and saying that it's going to underperform. I don't know enough about Twitter financially to say how it's going to go, but what I can say is that they have staying power, and they're also a company that has shown time and time again that they're willing to put in the work to be creative and come up with innovative solutions that really help bring out the monetary aspect of Twitter, and like working on capitalizing more on their software. So those are just some things to consider. It's actually had a fairly decent run ever since, when did this drop happen? Okay, so on April the 30th, and then May 13th, which we saw as a very common day for hitting the bottom right around $50. And then it's up about 40% from then. There we go. Okay, it looks like they might have earnings today. Well, with what Benzinga says right here, that Twitter might be on that list for earnings. Let's see. Report Q2. Okay, Thursday, July 22nd, after market close for Twitter. Delta Airlines, that's going to be huge for watching for guidance for what's going on for the second half of 2021. I would keep that in mind. Morgan Stanley, there's a lot of banks that are reporting. Goldman Sachs, Bank of America, Citigroup, Morgan Stanley's in there, JP Morgan, a lot of the bank stocks. We really want to watch those, and they're going to have, depending on their guidance, we could see a lot of movement in either direction, really, from the banks. So if we get good news for the economy, and we also get good news that inflation's and that they also believe inflation is going to be transitory, there's a lot of financial information that can come out from those banks and their guidance coming up. So their earnings should be pretty good for the big banks. So that'll be good for the financial industry. That's my anticipation of that. It's their guidance that we really want to look at for the rest of 2021 that's really going to make that determination. So keep that in mind. So back to Twitter anyway. So Thursday, the 22nd. And so who was this? Was this Angelito? Yeah. So I would look at their investor presentation to see what they project for themselves in 5 years. And then with their earnings coming out, I would look and see how they're progressing with their earnings, and being the first half of 2021. I think they have their calendar, or the calendar year and their fiscal calendar, both match each other. I don't believe that they're offset in any way. So this should be Q2 2021 for Twitter in the end of Q2 2021, ending June 30th. So I would listen to their guidance for what they say for themselves, for whether or not they're on the right track, if they have lowered their projections and their estimates for the second half of 2021, or if they've raised them, and if they talk at all about their outlook for 2022, I would also use that to repoint and also compare it to what they've said in their investor presentation. And it might help to determine whether or not they're on the right track. Ooh, there we go. All right, so this is the first time that we really see one on today anyway on TipRanks that gives us a downside. Low target 48, highest price target 82. So 68.17 would be right in the middle of two of those. And looks like a lot of this news came out 2 months ago. So Angelito, they could, there's some last month ones. Okay. 65, 82. Who's 82? Bank of America says 82. I don't know if I've heard of Mizuho Securities or not before. That'd be something to know. We could see after their earnings come out and after they give their outlook for the rest of 2021, if they give us that commentary, I think that we should see some more analyst estimates coming out. So I think in the coming weeks, we could have a little bit more information about how it's going to go. No problem, Angelito. All right, let's check in with crypto quick because it is 10 o'clock. So I should probably start wrapping things up because I have some things got to do around the house before I go to the dentist. One of my favorite places to go. All right, so Bitcoin still marking time right around in the mid 30s. So 33.5. Ethereum hanging around in the low 2000s. So not a lot to report there. Cardano's actually been hanging out for a while. We'll click on this one. And around that $20, $30 mark. So right now, I think that crypto is just sort of waiting. I don't think that we're in any sort of period of rapid growth or anything. That right now we have that sort of consolidating phase. And well, consolidating as far as crypto is concerned, that it's always been volatile, but we haven't seen really high run-ups and we haven't seen really low drops since it has dropped. So taking time to rest and recover, I think is going to just be an important thing and a natural thing. You know, when we look at the Wyckoff charts talking about the psychology of things and also the typical trend that you would have. I just don't think that we've hit that accumulation phase yet. I think we could have another scary dip that happens at some point in the future here before things start to work back up. So, yeah. When was our last big candle here? June 21st, and everything from then not really moving us too much. So we bottomed out. Where's that low price here? We bottomed out at about $1 just for a moment. This candle actually closed at $1.15. So $1.15 up to about $1.47. When I said about that $1.30 range, that's right in the average, right in the middle of those two. So it's just, it hasn't been too crazy recently. If we go and take a look at Ethereum, just because it's my favorite out of all of them. There we go. Announced that in his blog, Ethereum's London hard fork will launch. Ooh, hey, we have a launch date. All right. August the 4th for the London hard fork. That's EIP 1559. So that's going to introduce the base fee burn. Excellent. There we go. And it's the next big step on the way to Ethereum 2.0. There we go. So this base fee burn that we have, this is the first real impact that we have to temper the inflation rate that we have on Ethereum, which currently sits at about 4.5% annually. And the base fee burn is actually, in my opinion, it's fairly significant. So every transaction that happen on the Ethereum network has a base transaction fee. And I believe that adjusts up or down depending on the level of congestion in the network. So high congestion, higher base fee, lower congestion, lower base fee. But regardless of what that base fee is, it gets burned off from the transaction. And then the proof of work miners that we have that are still doing that work as the consensus mechanism. Consensus mechanism for approving those transactions. They'll get the rewards from that still. So we still have a lot of Ether coming into the marketplace, and because we're still at proof of work, we still have a lot of selling pressure from those miners selling off in order to pay for their business. Essentially, is what you're looking at. We also have a lot of staked Ether for Ethereum 2.0. Where I believe we're over the 6 million mark, 6 million Ether, which is getting to be a significant percentage of the total number of Ether that are available. So, you know, that being already at a few percent and still growing all the time, it could just be some calm days for Ether. It could be very quiet for Ether until we really start to see the impacts of that London hard fork, and until early 2022 when we get into proof of stake switching over from proof of work. And I think when we catch that efficiency stride, that's going to help us. And then the big thing will be when they actually move into sharding as well, that we actually really ramp up the scalability. So I believe that the price of Ethereum throughout that ETH 2.0 evolution, I think that this is just going to very, very quickly ramp up when it actually does start moving. And 2022 into 2023, we could really start seeing an inflection in that price to the upside very quickly as that plays out. And the more adoption that we have through the Ethereum network is also going to drive that as well. All right. So I'll wrap things up here. Let me see. It seems like ETH finding support around 2100. Yes, Sean. Right around 2100. Really, in my opinion, if we stay very close to 1800 or above it, we're in really good shape for Ether. If it falls below that 1800 mark significantly, Bitcoin is likely also significantly down. And I think that it would just be just another sell-off in the crypto market. But I think that the Ethereum network is just a champion, and that it's going to win out significantly over time from its current price value. All right. What else we got here? Twitter, Ether. All right, Jay, last one. I'm going to close with MGM here. All right, so MGM, we got online gambling. We also have brick and mortar, I think, also tied to MGM. So those are two different things that are going for that. Currently reporting that it's a little bit rich. We could compare that with how DraftKings would be comparing to its analyst estimates that we have. MGM, is that one Barstool? Yeah, if it's Barstool, let me know. Taco, hello Taco. AMC selling off. We can take just a quick peek at that, and then I really will wrap things up. The gambling stocks are ones that they've had that recent that peak and that volatility. Let me zoom out a little bit so we can see the run up that we've had all the way back from September to March to May. MGM has actually had a fairly good ride. The lows keep climbing, the highs have been climbing. We do have some weakness in the RSI that it's starting to taper downwards while the price goes upward. So one way that you could look at that is a sort of bearish divergence. So if you're looking for a buying opportunity in MGM, sooner more than later in the next few days, depending on overall what happens with the company, what happens with the markets. If it's status quo, that we just sort of keep on seeing trading without any real news and without any other big factors impacting the current price action. If we see continued weakness in the RSI here, but the price keeps climbing, that only more and more solidifies bearish divergence, which would be an indicator that we could have a significant drop in the price. So I'd be watchful of that in the near term. If I saw this happening with like a swing trade of my own, depending on when I bought in, I might think of maybe taking some profits. Depending on it's so hard without talking about a specific scenario. But let's say that I maybe got in back here around $33 and I saw it around 41. And I suspected that it was going to drop soon. Maybe I would take some of those profits, or at least mitigate some of my risk by selling some of my shares, or putting a stop in, just a stop loss or a trailing stop, something in order to kind of protect my downside a little bit. So just some of the thoughts that I have on MGM. They are doing really well in the online gambling arena, going up against like FanDuel and DraftKings. MGM gets mentioned all the time. They're an old player in the game, and for online gambling and esports, I don't think that they would give up very easily. So it'd be a good one to watch. We are hitting resistance right around like $43, $44 per share, 43.79-ish. All right. Penn has Barstool. Thank you, Sean. Okay, Penn has maybe. So Penn National's Barstool. So MGM, maybe it's just MGM. I'd have to look again. All right. So I got to wrap things up here. I actually have a drawing on here for AMC, for this pennant formation that we have. And the thing is about pennants, even though it's a bit of a bullish pennant, you can really still break in either direction. And so what happened was we actually broke to the downside of this. If I adjusted this just out a little bit, you would see once you start breaking out of that formation, it keeps breaking in either direction. In this case, it broke to the downside. So then it kept going downward a little bit. And really, I think we have some cooling off here. It doesn't necessarily mean that it's done. I think that the apes are still hanging strong. The shares that I purchased in Solidarity, I still hold on to those myself, so I still have my own position. And I think it's somewhere around the mid 50s. So I'm out of the money, but as we know, if you're part of the movement, then it's something that it's not really about the money. It's about buying and holding and keeping are forcing the people who overshort the stock, the institutions who overshort the stock, trying to drive the company to the ground. It's about trying to create that equitability in the marketplace, and also not to just financially break the company in the process. So this could turn around for us. What happened? We'll see. We had that sell-off, and then we had this big engulfing candle here, and we'll see how today plays out. We could start to hold a little bit strong. Hopefully, the people who decided to buy and hold, now that they're losing, if they bought up here, if they're losing that money, that the despair doesn't come in. If we want to continue to see the ape movement happen and really play off in that way. So those are just some thoughts on AMC. All right, guys, I better wrap it up here. Very nice, Sean. And it's also good to see you, Sean. All right, I'm going to start wrapping up. It's a little bit past that 10 o'clock hour. And I thank you guys for stopping by. It's been really awesome to have you. Keep those comments coming. I really do enjoy the engagement. I'll be back again tomorrow right around 9:15 until 10 a.m. And then I'm off for vacation. So I won't be live streaming until I get back the following week. But I should have some videos coming out to YouTube for you guys over that time. So I hope that you check them out. If you haven't subscribed, please do so. And we'll see you guys tomorrow. Have a great day. No problem, Taco.